Hi, everybody. Welcome back to Chapter 19. I'm just going to walk you through very quickly the third section of this chapter. And this is just keeping track of the values of a plant asset. So you've got up here, you've got your plant asset records. And then down here, you're keeping track of the annual depreciation expense, which you're familiar with from 19.2. So if you haven't done 19.2 right now, or as of yet, I would stop this one and then go back and do that. Or if you just want to review that, that'd be great too. But this is going to be pretty quick because we're just going to 19.3 today. We're not going to go to 19.4. So these pink areas are when we actually dispose of or sell the asset, dispose of it, trade it in for something else. But we're not going to get to this today. We'll be dealing with that on another day. Okay, so just really simple record keeping today and keeping track of depreciation for a certain amount of years. Okay, so for your convenience, I actually placed this over here. I don't know if you have that on yours, but I have it on mine. So it's the work together 1913. So we're talking about a display case here. Okay, so the display case is actually plant asset record number 105. So we're going to type that in right there. And the general ledger account is given to us 1220 right here. That comes from that place right there. And the description is a display case. So you're just copying what I do, which is great. And then the general ledger account, it's actually classified as store equipment. Okay. And this is important information in regard to depreciation. When we bought this, it says the date is January 4th. Okay, so it's going to be depreciated for a full year, which is nice and convenient for us, right? So January 4th is the date. And then we've got the serial number, and that is given to us as 374-02. Okay, so right now we're just filling out the top information of the plant asset record for the display case. Okay, so the estimated useful life number of years, I believe, is 5. So we're going to put 5 so we can self-reference easily. And the estimated salvage value of this asset is $200. Okay, so the original cost is given to us at $4,040, and that comes from 19.2. And the depreciation method is straight line. We haven't gotten to the other one yet, and that's coming. So straight line, and straight line is actually the most widely used and easiest depreciation. What's important is if you choose something that, or a method that you're going to use in regard to your balance statements or your income statements, anything that's going to affect those, it's if as long as you're using one that's approved by GAAP, just keep using the same one. Consistency is key, right? All right, so we're going to skip over the pink area because that's for when we get rid of this asset, and we've just bought it, so we're not going to do that yet. So the year, we're going to start with, let's go 2001. Okay, so it's like 2000x1. I like to put a real year in. So we're going to say it's 2001, and the depreciation expense we're going to calculate as, since it's going to be, so we're going to put parentheses, and the sale cost to us was $4,040. And what are we going to do next? We're going to subtract out the salvage value, put a little parentheses around that. Then we are going to divide by the estimated number of useful years. And that did not come out correct. All right, so I've got 440 minus the 200. Let's see. We'll do this again. So 540 minus the salvage value. Oh, I know what I did wrong. It's 8 years, not 5 years. All right, so that's good. because I was looking wrong with my key. I'm like, what did I do wrong? Yeah, so it's 8 years, not 5. Okay, so that will give us $480. So with accumulated depreciation, we're just going to cell reference that because it's only 1 year. And then we're going to subtract out the ending book value, or subtract the depreciation from the ending book value. So we're going to cell reference that and subtract out our annual depreciation expense, which gives us an ending book value of $35.60. Okay, so the problem says, let's go back here. We're actually going to complete at each asset record. It says use the following from 2001 to 2003. So we're only going to do 3 years of depreciation. So let's do this again for 2002. And since it's the same, I'm just going to cell reference it like that. The accumulated depreciation is going to be last year's accumulated depreciation plus what we incurred this year. So it's going to give us a total of $960, and our ending book value is going to be equals, and we'll take the ending book value and subtract out annual depreciation for this year, and that gives us $3,080. Okay, now we're in 2003, and our annual depreciation expense is going to be the same as above because it's a full year. So I'm just going to cell reference it for ease. The accumulated depreciation is actually going to, I'm going to see if I can copy this formula down like that. That works well. And so we've got accumulated depreciation of 1440. And then I'm also going to take this and copy this as well. So the ending book value for at the end of year 3 for the display case is $2,600. All right. And you're going to see in 19.4 where we're actually going to get rid of this display case. I'll show you how to do that later on. Okay, let's go down to the next plant asset, which is the workstation. All right, and we're going to fill this out like we did above. 106, and then the general account number is 1210. The description is the workstation. And the general ledger account is now office equipment. Whoops, put my cap block on. Office. What am I doing? It's really nice outside. It's very sunny, but it's really cold out. But I did already take a walk today, and I'll probably go again later. So the general ledger account is office equipment. So the date bought. Now this is where it gets a little tricky, remember, because not everything is always bought in the beginning of the year. Wouldn't it be nice if everything could be perfect that way, but it's not. So September 20th is when this purchase was made. Okay, so we're going to put September 20th as our date. Our serial number, we'll type that in, X56Y17. Okay, years of useful life. This is where I got the 5 from because I was reviewing this before I turned on the record. It's 5 years for the workstation. And the salvage value is 0. So we're going to use this thing right into the ground. Okay, so the original cost for this is $4,800. And the depreciation method is still straight line. Whoops. Nope. Now I got to go back and do this. My keyboard's very touchy lately. And see, I keep doing that. Ugh, right. Straight line, and then the original cost, $4,800. Okay. Again, we're going to skip the skip the old pink part, okay, because we're not getting rid of it yet. We are going to sell this baby, but not quite yet. Okay, so we're going to start with 2001. Now, this is not going to be full depreciation because we bought this on September 20th. And the magic date for when you buy something as to whether to include or not include depreciation is the 15th. Okay, so if you're on the 15th, then you can make a decision as a company as to whether you will include depreciation or not. Okay, so for our cases, anything in here, we're probably not going to have the 15th as a date. It's either going to be the 16th or the 14th, the closest to that magic date of 15th. But for us, it's September 20th. So we are not going to include September 20th for depreciation for the year. All right, so we've only got October, November, and December to include. All right, so let's do our little formula. And we're going to take we'll put a little parentheses here, take the cost less the salvage value, which is 0, right? So I guess we could, jump through the hoops here, 0, right? Or you could do nothing. And then I think what I'm going to do is do a double parentheses here, okay? But we're going to divide by 5 before we close it out with the parentheses. And then we're going to multiply it by only 3 out of the 12 months because that's all the depreciation we're taking for this year. So 3 divided by 12. And that gives us a total of $240. Our accumulated depreciation is the $240, as always is in the first year. Your ending book value is going to be the $4,800 minus the annual depreciation. So $4,560. Okay, so let's go to year 2002, we'll say, and let's figure out the depreciation. This is really easy now because we know there's no salvage value. So we're going to 4,800 divided by the useful life. And it's going to be $960. Okay, there's no partial year, there's no salvage value, so it's very simple. It's simply B19 divided by B18. Okay, accumulated depreciation, you know it, right? 240 plus 960 gives you 1,200. And then your ending book value is going to be the 4,560 less than 960. Which gives you 3,600. Again, we're into our last year because we're only depreciating these for 3 years, and then we're going to get rid of this stuff and bring in some new assets for our company. So the annual depreciation is going to be the same because it's for a full year. So it's going to be the same as above. I'm simply going to cell reference it. And then I'm going to add up the accumulated depreciation from last year plus what was gained this year, and that gives us $2,160. Our ending book value, you know it, is $3,600 minus the $960 gives us a total book value of $2,460. All right, so, and then conveniently up here, I think we're done with number 1 for the work together. And now we're just going to create an adjusting entry for office equipment. And the general journal is conveniently placed up here for you. And let's see what it says. Let's go down here and read it. On December 31st, 2003, Brookdale Banners determined the total depreciation expense for office equipment for the year was $13,125. So we're going to record that adjusting entry. So to reflect that amount that we need to count for that particular year for 2003. All right, so it's going to be December 31st, as always, our adjusting entries when it's the fiscal period. And it's going to, the account title, the first one, is going to be depreciation, if I can spell, depreciation expense, office equipment, and it gives us the amount, oops, that's going to be debited because the expense is going to be incurred for the year. And as you remember, expenses are debited when you increase them. So 13, whoops, that wrong again. That's December. Okay, $13,125. Right? So you're going to, when you have a debit, you have to have a credit, and the other account title is going to be accumulated depreciation. Office equipment. Because, and it's, yes, it's credited because we need a credit, but it's also credited because we have, because it's a contra account to office equipment, and it's decreasing the value of that office equipment. So what I'm going to do is I'm increasing the indent there, and we're just going to simply cell reference the 1325. Everything balances, everything's good, and we are done with 19.3. Great job, you guys. Sure must have been being in class, but this was okay, right? Not too hard. No, and be sure to check out Evans too. He does a really good overview of 19.3 with the key right in front, so you can check your work with his video as well. Okay. All right. I'll see you next time. Bye.